Good morning, everyone, and welcome to today's webinar on gaining an edge in a competitive purchase market with bridge loans. Now, as throughout the webinar, I'm sure you're going to have lots of questions. Please go ahead and use the questions tab to ask them. We've got a Q&A session at the end where we'll be addressing all of your questions. With that, I will pass it over to our today's speaker, Joe Lydon. Take it away, Joe.
Thank you, Rose. Good morning to all of you. Afternoon, I suppose, in some parts of the country. I'm going to talk to you about the bridge loan product that we've rolled out. That's who I am, Joe Lydon. So today's agenda, how it works, the credit requirements, income requirements, loan terms, featured loan programs, and we'll talk to you about some of the other things that we do. We'll spend most of the time on bridge loans. We're in San Diego, regional centers in Ohio, Rhode Island, and Georgia. Been doing this stuff for a long time, licensed in 43 states. What we do, we're going to focus on this is what we do, alternative documentation loans, in lieu of full tax returns. So bank statement loans. We serve the A-paper borrowers you see every day. The last securitization that we did, our average LTV was like 732. Average LTV was 67, and 65% of the loans that we do are purchase money loans. So a lot of the borrowers we do, you would call A-paper borrowers. They're missing conventional on the edges of usually income. Usually it's an income issue of some sort. You know, we've got little less rigorous guidelines than the agencies have. What we don't do, we don't compete with you on Fannie, Freddie, FHA, HARP loans, or VA loans. We don't do any of that. Total focus is non-QM. Makes LendSure different. All pre-qualifications are performed by experienced in-house professionals, usually within 24 hours. Full conditional approval usually within 48 to 72 hours. Good funding times, common sense. That's probably the biggest deal. Is we're not beholden to a set of guidelines. About 40% of the loans that we've done in securitizations do have exceptions. We pride ourselves in having good, strong credit sense, and therefore we do make exceptions. We had a very good bank statement program as well, and a unique approach to calculating DTIs when using rental income / losses. So what makes, let's see here. Come on. There you go. So what's a bridge loan? A bridge loan is a short-term, in our case, 1 year, single payment loan used to achieve cash out from a borrower's departure or investment property. The borrower is selling this property. Property must be listed for sale to be used for the down payment on a property the borrower intends to buy. So put simply, borrower owns a house that has plenty of equity in it. He wants to buy another house, but he doesn't have enough cash on hand to do it, and he wants to use the equity. He can do that through a bridge loan. How it works: it allows the borrower to make an offer to buy another property without having his departure property under contract. So he's therefore making a non-contingent offer for the new property. So if you have borrowers who are in that predicament, you bring them to us, we qualify them for it, and we can say, look, here's the way we would do this transaction. Then he goes out and starts making offers on properties that are non-contingent. The bridge loan must pay off the existing lien if one exists on the property, and it provides equity to use as the down payment. No monthly payments are due. We understand that there's one or two competitors out there that offer bridge loans, but the ones that we see have required amortized payments to be made, and they allow for a DTI to go to 60. We don't do that. We have a no payment loan, basically a bridge loan due in 1 year, or when the property sells whichever comes first. So therefore, you're not calculating that payment into the DTI. Finding the right home tops the list for most difficult steps in the home buying process, ideally suited for borrowers looking to upgrade to a bigger home that haven't yet sold their current home. It's a great solution for borrowers who need to access the equity from their current home to purchase their new home. A great solution in competitive housing markets, since home sellers typically won't agree to contingencies from the buyer. It's where the borrower wants to wait to get the best price possible for their departure residence. So most people do that. Okay, so right now I'm going to play you a video, and video is 3 minutes long. It won't bore you, but it does a pretty darn good job of describing how the bridge loan works. Moves fairly quickly. There may be some music to it. There may not be some music. I ran this about 20 minutes ago, and the music worked on my end, but Rose was telling me it wasn't working on her end. So it really doesn't matter that you have the music, because we don't really want you dancing around your desk. But nonetheless, the music adds a little to it. So if it doesn't come up, it doesn't come up. It is what it is. But you'll still get the point of the bridge loan program. Okay, so that's the video. Now we're going to move to credit requirements. Minimum FICO score of 680, no major credit events in the last 4 years, good AA as agreed mortgage history in the last 4 years, 5 minimum trade lines with 2 active. Income requirements. The DTI calculation will be based on the second permanent loan, it's PITI. The bridge loan will not affect the DTI. A full bank statement, acceptable documentation for both loans. Pricing adjustments based on our super prime and alt-A guidelines. The departure property is not to be rented, nor will we accept any rental income associated with this property when calculating the DTI and residual income. Maximum DTI is 50%. Collateral, the bridge loan, no rural properties will be considered. Now, I mentioned to you earlier, we do make exceptions, so I would look at a rural property and consider it if it were at a lower LTV. This next second bullet point is very important. The departure property must be MLS listed for sale, and the listing agreement must be evidenced in the file. The whole goal of this program is to do a short-term loan, to be 2, 3, 4 months into it, and then have them sell it and then move on. We don't really want the loans to go to full term at 12 months. So that's why we have this in there. Maximum LTV. Loan to value is going to be tied to loan amount. So we go up to 75% LTV on loan amounts up to 750, and we'll go to 70% LTV on loan amounts between 750 and $1.5 million. And those larger loans require a tighter FICO of 750. Non-owner occupied in the second home will go to 65, up to 750, and up to 60 on loan amounts between 750 and $1.5 million. So the answer is yes, we will use non-owners. Not sure why we're doing second homes, but that's what it says. Okay, new property permanent loan. This is on the new property. The LTV is determined based on the super prime guidelines. Those are our guidelines. Though may never exceed 80%. Higher loan amounts will be affected based on reductions in LTV. So, you know, it may not always be 80% if it's a real large loan. It's going to be perhaps 75. Non-owner approved by senior management only. We're going to have a first position on both properties. It's 1 year not renewable. The borrower affidavit to be signed indicating the borrower knows the bridge loan will not be renewed and the borrower fully intends to sell the property. The bridge loan provides the default interest at 12% and will be in default if sales listing isn't maintained. So in other words, if the borrower decides, you know, a day after closing the loan that he doesn't want to sell the house and he delists the property, he will be deemed to be in default and the interest rate goes to 12%. So again, I say it again, this is intended to be a short-term loan for 3 or 4 months. And so we've put this in there to kind of incent people to do the right thing. Loan amounts between 150 and $1.5 million. When we fund a bridge loan, it must always fund the second loan associated with the purchase of the new home. So we can't just do the bridge loan only. We have to do the bridge loan. It comes with a rescission period, so it closes 3-4 days in advance of the new home closing, and we tie them together. Usually the same escrow is going to handle both fundings. These are other featured loan programs. We have got a great asset depletion and asset qualifier loan, very helpful. Good bank statement program, I mentioned that earlier. We'll do the bank statement calcs up front so that you don't have to wait around for income. We'll give you an income number usually within 24 hours. Good investor cash flow program, an ITIN program we just rolled out recently, and a good foreign national program. Condo tells. This is an interesting one. I'm not sure if you know it, but I found out yesterday that Fannie is changing their guidelines on condo tells starting in December. So much more strict outlook on properties that are operated by hotels and have daily rentals. So we do condotels, other opportunities, cash out loans, non-warrantable condos, condotels, large acreage properties, 2 to 4 unit properties, second homes, jumbo loans, investor cash loans, bank statement loans. Asset depletion can be used as a sole source of supplemental source of income. Interest-only loans are still available. We do have a 10-year/40-year product. So it's interest only for 10, then it converts to a fully amortized. It's got a 30-year term from that point. Very, very handy and useful for investor loans. Non-permanent resident aliens, construction takeout loans, the lease option and land contract loans. Properties can be held in the name of an LLC or a corporation, even if it is owner occupied. LendSure can finance up to an extra 2% LTV for any lender or broker costs when the base LTV is at 80% or less. Should say it doesn't affect the pricing bucket. So that's what we're intending to say there. And then there's this private label kit that Rose will speak of for a moment or two.
Thank you, Joe. So yes, we've assembled a number of private label resources for you to use with your realtors and with your consumers, your borrowers. Now, this includes materials on the bridge loan program, including, I added it this morning, the video that you guys saw, but without branding. So you can go ahead and you can have your logo put in on the end of the video with your contact and use it as a way to explain to your borrowers and your realtors how the bridge financing program works. The kit includes emails, banners, it includes flyers that you can put in customized with your logo and contact info. Just look for you don't have to worry about remembering this URL. Look for the email, the thank you email that I'm going to send you in about an hour, and that's going to have a link to the private label resource kit.
I think now we said we'd take questions.
Okay, great. First question, how long does it take to get a bridge loan? Do you require appraisal for the bridge loan?
Okay, I'll answer the second question first. Yes, we require an appraisal for the bridge loan. It's just really we handle it like any other loan. How quickly can we do a bridge loan it's going to be disclosed like any other loan as well. It is considered an owner-occupied transaction, even though it's a departure property. So all of the disclosures that would go with a primary residence are going to be applicable here. The fastest that we can close a loan is generally 8 days. And that 8 days ties out to the ability of the broker to present us with a full and complete package, appraisal included. And we do those loans. I mean, we regularly advertise that we can close loans in 8 days. And as long as the broker has a good, clean package, generally they're just miss Fannie loans, things have just fallen out that was intended to go conventional, and the broker, for some reason, something happened at the very end and it didn't close. So the broker brings it to us and it's a full pack original, and we're able to immediately disclose it and then wait the 7 days and then close it on the 8th day. We do that. We can do the investor loans within a 3-day period because they don't have the same disclosure requirements. Next question.
Are bridge loans allowed in Texas?
No, they are not.
Okay. Are marketing materials available to easily explain the program? Yes, you'll find marketing materials, flyers, general information in the kit, but also, as I mentioned earlier, the video that you can download and use as is, or you can post it on your YouTube channel, or you can just insert the logo at the end of the video with any video program. Can an investment property be used as collateral for the bridge loan?
Yes, it can. In fact, I see it. I'm not an expert on 1031 exchanges, but I think there's something called a reverse 1031 exchange, whereby the holder of the property that is a rental now comes to find another property that he wants to buy immediately, but he doesn't have the capital to do it. he could use a property that he intends to sell as collateral for a bridge loan, and then buy the property, and then immediately list that property. It has to be listed anyway, and then sell the property. So the answer is yes, you can use a non-owner, an investment property as collateral for the bridge loan. It must be listed and intended to sell.
Okay. There's several questions about broker compensation. One is a broker paid comp on the bridge loan? How is there do they get compensation on both loans? Is broker paid comp? So a bunch of questions on compensation. Do you want to address that?
Yes, it's a good question, actually. So these bridge loans, they're considered balloon loans because they have one payment ballooning in 12 months. And the Section 32 requirements for balloon loans allows for a 10% annual interest rate. Well, our interest rate on the bridge is 7% and 1.5 points to LendSure. I'm actually selling the loan to an investor who pays me par for the loan. Therefore, I make no premium on the bridge loan. So the 1.5 points that I'm charging up front is the only revenue that we're going to get, in addition to a standard admin fee of $1,300. So you've got to, in order to test for the Section 32 test, you have to take the 7% interest rate, add to it the 1.5 points. That takes you to 8.5. Now from here, you can go to 10. So that would seem to look like it allows for 1.5 points for the broker. Well, it actually doesn't, because the $1,300 fee is going to be all part of that calculation as well. And then you have what's called APR related fees. And there's like title insurance, and there's other fees that are APR related that go into this Section 32 test. So they're all related to the loan size. So for smaller loans, obviously a $1,300 admin fee on a $150,000 loan is the equivalent of almost a full point. So that would take 8.5 to get to a 9.5. So the broker would only be able to make 0.5 point. Of course, most of the loans that we do are $500,000, $600,000, $700,000 loans. So then in that case, it would be that $1,300 fee would be closer to 20, 30 basis points. So it really has to do with loan size. What I have found is most of the loans that we have done in this arena, the broker is able to make anywhere between 75 and 125 basis points on the bridge loan. So yes, they can be paid on the bridge loan, but they've got to operate within those constraints that I've just described. With respect to the second loan, the loan for the dream home, of course, the broker can make whatever full commission he deemed to make, like he would on any other loan. So he can make money on both loans, though there are some constraints associated with the bridge loan.
Okay. What are our interest rates look? What do our interest rates look like right now? And do we offer an interest-only option?
Well, our interest rates, I think, are very competitive in the non-QM space. They range from a low of 3.99, until you get all the adders. Most of what we do are bank statement loans. So once you start adding adders, the rates are in the mid to high 4s into the low to mid 5s, call it. I mean, that would be because most of the loans that we do are higher quality. So they're good quality FICO borrowers. Usually they're coming to us because they're a bank statement loan. So in those cases, the interest rates are going to be, call them mid 4s to mid 5s. Okay. Yes, if you bring us one that has no adders, we can get a 3.99 rate done, but that's at a 50% LTV, so not many like that. So 4.5 to 5.5, call it the range. But sometimes we see loans where they're in the 6s and 6.5 range. But we've recently lowered rates, so our rates are, I think, pretty darn good right now. I forget the second part of that question.
Interest only.
Do we do interest only on? Yes, we do interest-only loans. There's a 25 basis point adder for the interest-only loans. But it's a very compelling sale because it's a 10-year it's 10-year fixed, 40-year IO. I mean, it's a wonderful sale, especially to an investor, because it's fixed for 10 years, and then it's fixed for the next 30 years, and it's on an interest-only basis. So um, it does carry a 25 basis point adder, but when you look at the savings over the first 10 years, it's significant, especially for larger loans. It's very significant. So it's a great product. Some of my best AEs use the IO product aggressively and do it often, sell it often.
Okay. Do you can we do a bridge loan by itself?
No, the bridge loan um, must be made in concert with the loan that is going to be made on the new property. Now, let me give you an example. We had one where, and that's the deal that I have with the investor who buys these loans. They say, well, we're not going to do them if all we're going to get is the bridge loan. So we had one, it was an elderly couple, 800 FICOs, full doc, pension, they had assets, and they wanted to move down. They lived in a $2.5 million house, and they wanted to move into a $1.2 million condo in Pasadena. And so they really was just looking for a $1.2 million bridge loan on their free and clear home, which of course we could give them, but we had this rule that said, we've got to do the loan on the new house. So, the AEs, we try to be upfront with brokers and talk through things like EPO and those kinds of things. So in this case, we said, well, we need the new loan on the new house. So we communicated with the borrower, and the borrower agreed to take a $250,000 loan, even though they didn't need that. The bridge loan alone could finance the entire purchase price. So they took a $250,000 loan on the new house, and they agreed to keep that loan open for 12 months. And so there was an example of a way we kind of got around that rule. But generally speaking, yeah, we're going to want the loan on the books for 12 months, and from there we go from there.
Here's an interesting question. Can we do bridge loans for foreign nationals?
Well, I suppose a foreign national, if you just think it through, they can own a second home in the U.S. and or an investment property in the U.S. So we say that we would allow for the financing of using a bridge loan on a non-owner occupied property. So I think the answer is yes, as long as the buyer's buying another property here. I'm not sure that would take place, but maybe. So let's for now say yes.
Is there a minimum loan amount to carry on the new property for 12 months?
Not really. I mean, in some markets, I think we'll see $150,000 and $200,000 loans. Our average loan size is more like 500,000. So, but we know that the U.S. has got a lot of variation in value. So, I wouldn't want to be doing loans under 150 on this kind of a product.
Okay. Are loans available for borrowers whose income comes from the cannabis industry?
Not at this present time.
Okay. Do we do business in Florida?
Yes, we do.
Awesome. What's the current interest rate on the bridge loan?
7% plus 1.5 points to LendSure.
Okay. I'm getting a lot of questions on whether they're going to get a copy of the slides and a recording of this presentation. Yes, look for an email from me, Rose Waldy, within the next hour, and that's going to include a link to your private label resources. It's going to include a recording of the presentation, and it's going to have the slides. If so, I've got a couple of different questions from people asking if they need to be approved with LendSure to do business with us.
Yeah, generally speaking, we don't require that a broker be signed up before he sends us a loan. If you send us a loan, call it to do a pre-qual, a 1003 credit, the first thing that we're going to do when we approve that loan in underwriting, the step number one is going to be broker must be approved by LendSure through convergence. And so we don't require that you be signed up with us in advance of sending us a loan, but we do require that you are signed up and approved through convergence with us. We use convergence prior to funding that loan. The way we deal with that is we just make it the first step on the approval. So if you're in a big hurry to do an 8-day close, that might be problematic.
Okay. And finally, I've got a couple of different questions on the occupancy types. Does it have to be a primary residence? Can you do a bridge loan on an investment property to buy a primary residence? And what is and is not allowed on the bridge loan program?
Well, I said earlier that we will allow for bridge loans on investment properties. The LTV is less. It's 65 max LTV on an investment property. So as long as that investment property is listed for sale, the borrower intends to sell it, then the answer is yes, we will consider doing a bridge loan on an investment property. We did one pre-COVID. We had a borrower who came to us with a request. He was planning on selling both his investment property and his primary in order to buy this new home that he was getting into. And we did 2 bridge loans to give him the capital that he needed to do the new, we call it the dream home. So that took place. We actually did that transaction.
Okay. Is there a prepaid penalty on the bridge loan?
There is not.
Okay. And if they are not sure whether the borrower is going to keep the second loan for 12 months, can they charge upfront points for borrower paid comp?
Yes, that's an excellent solution. That's usually what we work out with the broker when we have the conversation around EPO. I call it an adult business-like conversation that says, look, here's the issue around EPO. And usually we're able to restructure the pricing up front so that no one gets hurt. The last thing that we want to do is be calling a broker up for his commission on a loan that he did maybe 3, 4, 5 months ago. It's not a friendly place to be. We don't want to do that, nor do we want to make loans that don't make any money. So we try to have adult-like conversations up front about those kinds of topics. And usually we are able to work through that stuff.
Okay, great. And that's it for Q&A. Joe, do you have any parting words?
I do not. I thank you for your business. If you've done business with us in the past, I thank you for that. And I look forward to doing business with folks that we haven't done business with in the past. I think you'll enjoy the experience. We pride ourselves in the service levels that we deliver, and we think we've got a good menu of products as well. So awesome. I look forward to doing business.
All right. With that, thank you so much, everyone, for joining us today.